You know when you're checking out online and that buy now, pay later option just appears out of nowhere? Or maybe you've wondered how your Uber driver gets paid, like the second you step out of the car. Well, there is a massive, and I mean massive, financial revolution happening right now inside the apps you use every single day. And the crazy part is, most of us don't even see it. So let's pull back the curtain on this hidden world of embedded finance. And when I say massive, I'm not kidding. The global market for this stuff is projected to hit an absolutely staggering $1.73 trillion by 2034. To be clear, this isn't just some niche tech trend. It's a fundamental rewiring of how we all interact with money. So what are we really talking about here? Well, the concept itself is actually pretty simple. Embedded finance is exactly what it sounds like. It's taking a financial service, like a loan or a payment, or even insurance, and plugging it directly into a non-financial company's app or website. Essentially, the bank comes to you right at the moment you need it, wherever you are. Now, while all the technology feels brand new and super cutting edge, the actual idea? Oh, that's over a century old. We're talking back in the 1920s when Ford started offering car loans right there at the dealership. What's different now is the tech. Things like APIs and these new platforms allow basically any company to do what Ford did, but digitally and at a scale that's just mind-boggling. Okay, so this brings us to the big question, right? Why is this all happening now? Why are financial services suddenly becoming invisible, woven into the very fabric of all these other businesses? Well, the answer comes down to one word: friction. You know the drill with traditional banking, right? It often means separate websites, long application forms, waiting around. It's just a hassle. Embedded finance completely flips that on its head. It's seamless because it's happening inside an app you're already using. It's contextual. It offers you travel insurance right when you're booking a flight, not a week later. For everyone involved, customers and businesses, it's just a way better experience. And listen, this isn't just about making things convenient, it's a phenomenal business opportunity. The data from Bain & Company here is just wild. Companies that plug in financial services can see their revenue per user shoot up by as much as 5 times. Their customer retention can triple, and the business itself can grow up to 25% faster. I mean, with numbers like that, is it any surprise that everybody wants in? So how does a coffee shop or a rideshare app suddenly start acting like a bank without, needing to become a bank? Well, they don't. The magic is all happening through this really clever 3-layer partnership. It all starts at the bottom with a licensed sponsor bank. They're the foundation, providing all the legal and regulatory stuff like FDIC insurance. Then in the middle, you've got what's called a banking as a service, or BaaS provider. Think of them as the tech company, building the bridge, all the APIs and infrastructure. And then at the very top, you have the end brand. That's the company you actually know and use. The brand focuses on the customer experience, while the other 2 layers handle all the complicated financial plumbing behind the scenes. Okay, enough of the theory. Let's get to the fun part and look at how this all actually works in the wild, with some examples I promise you'll recognize. Let's take Lyft. For any gig worker, one of the biggest pain points is waiting to get paid. So what did Lyft do? Through a partnership, they built a debit card and a bank account right into the driver app. This means drivers get paid instantly after every single ride. They embedded a whole banking solution just to solve a core problem for their most important asset, their drivers. And then, of course, there's Starbucks. Their mobile app might just be the most successful example of embedded finance ever. By blending payments with a ridiculously powerful rewards program, they basically created their own financial ecosystem. And it works. An incredible 55% of all their US revenue comes from Starbucks rewards members. They didn't just build an app to buy coffee, they built a loyalty engine that prints money. Now, behind that simple, seamless experience is a technical engine that is incredibly complex. This is basically a blueprint for how an e-commerce site can offer you a loan in the blink of an eye. Every little piece of this system is talking to the others in real time, checking eligibility, creating an offer, processing the loan, all in the time it takes for a web page to load. It's this hidden complexity that makes everything feel so simple for you, the user. So this complex technology is getting better and faster every day, and it's what's powering that trillion-dollar future we talked about at the beginning. So what does the road ahead really look like? This table right here, This tells you exactly why this market is absolutely exploding. If a company wanted to partner directly with a traditional bank, it could take a year, maybe 18 months, and be a total regulatory headache. But by using one of these BaaS platforms, they can launch a financial product in as little as 4 weeks. The BaaS provider takes on so much of the hard stuff, making it faster, cheaper, and easier for almost any brand to get into the game. But, and this is a really big but, this rapid growth comes with some serious risks. Because that sponsor bank is the one who's ultimately on the hook, they are under an intense microscope from regulators. This quote here is a huge wake-up call. The banks powering this revolution are 9 times more likely to get in trouble with regulators. People are watching, and the stakes could not be higher.
So if we put it all together, here's what we see. The growth is going to be blistering, over 31% a year. But the 2 big speed bumps are going to be regulation and fraud. These complicated systems can create little cracks for criminals to slip through. The next big opportunity, though, is taking this idea beyond just consumer apps and embedding finance deep into business-to-business operations, automating things like invoicing and supply chain payments.
And all of this leaves us with one final fascinating question to chew on. As all of these financial services just disappear into the background, becoming a seamless part of our favorite brands, what on earth does that mean for the future of the traditional bank on the street corner, the one we can actually see?
This is not financial advice.